What sort of effect could ending these programs have on credit markets? They've been so successful at bringing down credit spreads.
Yeah, Anna, that's exactly right. I think that really is the fear that a lot of this rally that we've seen really across the entirety of the U.S. credit space has been fueled by that Fed initially coming in for liquidity, but as we get on later in the year, really acting as a backstop. I mean, look at CCC is rallying 26% since that March low. So the question is, without the backstop, does this rally come under threat? Certainly a question that people are starting to raise, but to play devil's advocate a little bit, Nordea Sebastian Gailey says that, look, in order for high yield to start to underperform, we need to see more inflation. We need to see forward rates pick up, which won't likely happen until the second half of next year when the economy starts to firm up, Anna.
And have we seen any reaction yet, or are we going to have to wait until the US trading community gets fully into action a little bit later on? What has the reaction been so far?
Well, certainly the U.S. trading community was in action during the initial announcement when we initially heard that Mnuchin had asked for this. And we did see a rally in U.S. 10-year. The yield so far about holding that rally. But otherwise, I wouldn't say this is a huge reaction so far. In Asian markets, for example, traders say that credit default swaps widen maybe about 1 to 2 basis points. There seems to be an overriding opinion at the moment, as Stephen Innes from AXA Investors told me, that the Fed is just going to sort of paper over the cracks with QE going forward. So perhaps that's why we're seeing some of this muted action. I should say the S&P 500, it is down 0.5%, Anna. You could chalk it up to fears over the economy as this stimulus gets pulled away. But at the same time, there is an options expiry today. So it's hard to really differentiate between the noise and the decisive action from traders today.